Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to another enlightening episode of Tax Smarts Unlocked. I'm your host, David Robson, and today we're diving headfirst into the world of depreciation, a concept that makes accountants gleeful and business owners a tad overwhelmed. But fear not. We're going to break it down, add some humor, and leave you with actionable insights. Think of depreciation as that unassuming tool in your tax toolkit that, when used effectively, can save your business a bundle in taxes. So grab a cup of coffee, or maybe something stronger if tax talk isn't exactly your jam, and let's get started. Let's begin by understanding what depreciation actually is and why it's so crucial in tax planning. In simple terms, depreciation is the process of allocating the cost of a tangible asset over its useful life. This concept acknowledges that assets like machinery, vehicles, and office buildings don't last forever. They wear out over time and gradually lose value. By recording depreciation, businesses can accurately reflect the use of assets in their financial statements, which in turn affects taxable income. By strategically leveraging depreciation, you can significantly lower your business's tax burden. Now let's explore the different types of depreciation methods. The straight-line method is perhaps the most straightforward. Here, the asset's cost is spread evenly across its useful life. This method is great if you anticipate consistent usage. Then there's the declining balance method, which front-loads the depreciation expense, ideal for assets that lose value faster in the early years. Choosing the right method depends on your financial strategy and the nature of the asset. Understanding these methods can equip you to align your financial goals with tax savings. Pretty neat, right? Depreciation's impact reaches far beyond just tax filings. It plays a pivotal role in business financial statements. By recording depreciation, you not only reflect asset usage, but also affect your net income and consequently taxable income. This is where the brilliance of depreciation shines. It legally reduces your taxable profits, resulting in lower tax liabilities. However, it's essential to balance this reduction with accurate caution, as understated income can impact your financial health assessments from investors and lenders. Allow me to share a real-world example to illustrate how businesses can effectively utilize depreciation. Imagine a small business owner, Jenny, running a thriving cafe. She invests in state-of-the-art coffee machines costing a pretty penny. By using accelerated depreciation, Jenny maximizes her deductions early, thus freeing up cash in the initial years to reinvest into her cafe. This strategic planning aids in her business's growth while keeping her tax bill in check. A win-win situation powered by the magic of depreciation. There are common misconceptions that float around the realm of depreciation, one of which is viewing it simply as a paper loss. While technically true, dismissing its real-world benefits on your tax liability is a costly mistake. Depreciation offers genuine savings that can enhance your business's cash flow management. Also, not claiming depreciation can lead to overpaying taxes. Nobody likes leaving money on the table. By ensuring you utilize this tool, you keep your finances well-oiled and efficient. Identifying which assets qualify for depreciation is another crucial part of the puzzle. Generally, assets that have a useful life beyond a year, like machinery, vehicles, and buildings, qualify. However, not all costs can be capitalized. Some items, like regular supplies or minor repairs, must be expensed immediately. Being well-versed in these distinctions is key to making informed depreciation decisions and maintaining compliance with tax regulations. Ignoring depreciation strategies can have repercussions. If you're not capitalizing on depreciation allowances, you're potentially weakening your cash position. Moreover, tax credits are often tied to depreciation figures. Hence, missing out on depreciation could mean missing valuable credits. Fortunately, working with a professional can mitigate these risks. A seasoned tax professional can optimize your depreciation planning, integrating it with the overall tax strategy to maximize benefits and minimize liabilities. As tax laws evolve, so do the opportunities and challenges in depreciation planning. Recent changes may affect how certain assets are depreciated, potentially opening new savings avenues or requiring adjustments to existing plans. Staying informed about these changes and their impact on your business through a professional advisor is paramount to maintaining an effective strategy. Remember, proactive planning and staying ahead of legislative shifts is the key to smart tax management. Before we wrap up today's discussion, here are a few practical tips for working with a tax professional on depreciation planning. Always keep detailed records of your assets and any improvements made. Regularly review your depreciation schedules and rectify any discrepancies. And importantly, maintain an open line of communication with your tax advisor, ensuring they are well informed about any new acquisitions or changes to your business operations. It's this collaboration that helps unlock the true power of depreciation strategies. As we conclude today's episode on understanding depreciation, let's summarize what we've learned. Depreciation, while often overshadowed by more glamorous tax strategies, is a robust tool for business growth and tax savings. By choosing the right methods, understanding its impact on financial statements, and staying informed on tax law changes, you can turn depreciation into a cornerstone of your tax strategy. And remember, working with a professional not only optimizes these strategies, but also brings peace of mind. Thank you for tuning in to Tax Smarts Unlocked. Until next time, keep those tax plans proactive and your humor intact.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.